Hey everybody, what's up? Market's up today, Dow up 370 points, everything's up. Probably some new news about the so-called trade war. I don't even pay attention to that anymore. I made a video last week or a couple of days ago. I made a video talking about how it is absolute lunacy to jump in and out on every little headline, on every little pronouncement, on every little tweet of President Trump, every little news item. If you think that's trading, if you think that's investing, I mean, that's folly. That's nonsense. That's gambling. Might as well go to Vegas. You'll have more fun. I've said that so many times. If you like gambling, go to Vegas. The weather's beautiful. You got that desert climate. You got beautiful hotels there. You could have fun. Because that's what you're doing. You're not intelligently investing. You're not even intelligently trading. If you're trying to beat the algos, you're not going to beat the algorithms. I mean, those companies have their servers right there at the exchange. They literally read the order flow coming down the pipe. It's a form of front running. It's legalized. At one point, they were talking about making it illegal, but those companies were able to basically bribe off lawmakers in Washington to keep that activity legal. It's front running. When I was a floor trader, and yes, I spent many, many years on 4 exchanges. I was a member of the NYMEX, the COMEX, the CME in Chicago, and the New York Futures Exchange. Front running was illegal. We were not allowed to front run, but this is legal front running, the algos. That's what they do. They see the orders coming down electronically, and they jump in front. You're not going to beat that system. And I think any attempt to do that, and if by the time you see news items and you jump in and out like that, that is just sheer folly. It is nonsense. I have tried to boil this down into a scientific process. My information is superior. My understanding is superior based on MMT. I understand the impact of policy. I understand the impact of monetary policy, fiscal policy. The vast majority, or I should say all of mainstream economics, which is what you'll get coming out of Wall Street, what you'll get coming out of the media, is wrong in its understanding of basic economics. So my understanding is superior. The information that I have is superior. Everything I have is in real time. If you're looking at numbers 30 days old, a quarter old, even a week old, I'm ahead of you on that. Last week, I had a guy, I put out an email last week saying, well, here's the support in the S&P. It's at 2687. The market came crashing down. He sends me an email crying. The guy's crying. How could you? How could you send out an email 2687? Now it's 50 handles down below that. I don't know. Well, we traded down to like 26 even on the S&P. I think we busted below that. We traded down below 26 and at 25. How could you? You don't know what you're doing. How could you put out a support level at 2687? Where is it today? It's at 2680. It's at 2680. It's right back there. For those of you who think you can be absolutely precise in your timing and pinpointing these turns exactly at the proper moment, that too is sheer folly. I mean, you are really, really this kind of microscopic, surgical precision that you're after. This is, again, the system fairy, thinking that if only I can be exactly right in predicting that absolute moment when the market is going to turn, the top tick or the bottom tick of prices, that's the quest I am after. Good luck with that. Good luck with that. You know they have these airplanes, they build these airplanes with the wings swept forward. And actually, if you've ever seen these airplanes, they're pretty incredible. They could fly around. They're very maneuverable. But it takes a computer capable of making something like 500,000 calculations a second just to keep that thing in the air, because it's not aerodynamically correct. So yeah, I mean, you can make an airplane fly with its wings swept forward, but it's much easier to make an airplane fly in the proper aerodynamic shape, and that is with the proper contour of the wings and the wings swept backward. That's why every single airplane you see has wings basically in that formation, swept backward, at least at some angle. They're not swept forward. You can go about it the hard way. You can make the wings swept forward, and you could get some computer to do the 500,000 calculations a second in order to keep that thing in the air, but why bother? If you've ever read the book Reminiscences of a Stock Operator, of course that was by Jesse Livermore, the famed speculator, late 19th century into the mid 20th century. And by the way, when I had my floor brokerage company, I used to give that out to my employees and say, read this book. It's a fantastic book. If you've never read the book, I really recommend that you read it. I've mentioned it here many times. It's a short book. It's a wonderful read. It's a lot of fun to read. You can get it on Amazon. But in there, he talks about how it was he calls it his sitting that made him a lot of money. In other words, his patience, his waiting. And there's a quote in there, and I'm just paraphrasing it now. He said, "It's no trick to be right on the markets." He said he's known many traders to be absolutely right at the right time. They bought when prices could show them the greatest profit at the exact moment. But he goes on to say, their experience invariably matched mine, which was they never really made any money. He said it's very rare to find traders who can be both right and who can sit tight. In other words, patience, riding the move, riding it out. And within any big macro move, there are going to be counter trend reactions. Okay, we've been over this so many times. Talking about the dollar. The dollar is in a fundamental downtrend. It's been in one for a long time. And recently got restarted, this downtrend, in December 2015 with the Fed reversing course on interest rates, and also generally in a broader fundamental, which is the record unprecedented fiscal expansion that we have seen in the Trump era. And we have been now for 8 or 9 months in a counter trend rally. And I can go back, and you can go back basically and look at the dollar index. The Fed has a dollar index. And over the course of the dollar's decline, basically since 1971, there have been many counter trend reactions that have lasted 6, 7, 8, 9 months, a year and a half. They could last. But the ultimate, you look at the price trend, the macro, the big picture price trend. And by the way, that's not because people have been wanting to get rid of the dollar. As a matter of fact, it's the opposite. It's the ubiquitousness of the dollar. It is the desire by the rest of the world to net save in dollars. That actually is the fundamental behind the weaker dollar. It results in perpetual balance of trade deficits. That has to be true, because if the rest of the world wants to net save in dollars for whatever reason, they must export goods and services to the United States, and they will do that at any cost. If that means keeping wages low, if that means currency manipulation, whatever, they keep their economy through policy in such a way so as to accumulate dollars. That's what they want to do. And it actually causes a net creation of dollars. The dollars go down over time. But there are counter trend reactions. That's what I'm trying to say. Getting back to the Jesse Livermore quote, men who can be right and patient, or women who can be right and patient and sit tight, those people are rare. And this endeavor to find the absolute precise surgical moment to buy and sell, that doesn't result in anything. It doesn't result in anything. Maybe an ego boost. See, I don't need that. I don't need that. I need to make money. And the way to make money is to have patience. If you think that the way to make money is to be on this quest for the exact precise moment every single time, you are on an endless journey and a futile quest to find that. You are rigid in your approach. If you understand anything about martial arts, about fighting, it's fluidity, it's looseness, it's being able to transition. It's being able to get into a situation that puts you on the defensive and wait for an opportunity to move out of that. Rigidity will break you. Okay, probably heard of the story, the proverb, the oak tree, and then that willow tree, the one bends, the other one snaps, breaks in half. Rigidity in systems, rigidity in thinking, the belief that there is some system. Again, we come back to this idea that many of you believe that out there lies some system that will allow you to become successful as traders without any adversity, without any discomfort. It will have built-in, very, very modest, small stop losses, and the profits will run and run. Right? Look at the famous so-called wisdom of trading: let your profits run, cut your losses short, which assumes the unassumable, which is that you know your profits are going to run, and you know that if you cut your loss right here, it was definitely going to get bigger. You don't know that. That's basically saying you know the future. You can predict the future with 100% accuracy. This is why so many people lose. They buy into these false concepts about successful trading. I am the only one who teaches the reality of how to make money as a trader. And it's not about microscopic precision of getting in and timing. It's about time, not about timing. Go get that book, Reminiscences of a Stock Operator. It's a great read. You'll enjoy it. Bye.